we got something super exciting to talk about right now. Maybe it's something our grandchildren will look back on, because this is kind of a once in a lifetime, once in a blockchain opportunity. And it's these Polkadot Parachain auctions. And you're the guy, because you understand this stuff really well.
That's exactly it, Brian, because really 2021, we hear about NFTs, we hear about metaverse through Facebook, but really one of the most important topics is the battle of the blockchains. Proof of stake, proof of work, transitioning, and having new models, like you're saying, borderless finance, anyone could participate. This is probably the safest way to earn a return. When you compare like blockchain and DeFi relative to Fortune 500 companies, where the CEO you have 0.0001% chance of meeting one day, the blockchain space is crazy. Even though the guys have, they're one of the biggest ecosystems in the world, they're accessible. So it's not too hard to go and talk to them and ask questions. How's the culture there? Are people really hungry? Are they working hard? Do they love what they do?
This stuff isn't that complicated, and this is a way to take control of your finances, period. Whatever you do today, try getting a DOT wallet, right? Try getting the extension, get some DOT, and maybe try doing this. Will it not be too late for me to be involved in this auction?
No, I don't think so, because actually today you already have 5% bonuses. So the earlier you contribute to a crowd loan, the more the bonuses you get. You can actually take the tokens and stake them for a return. So I know that I'm getting the tokens back, and I'm going to be able to stake them for an APY percentage right away. And that's the beauty of it. So you can start using it, staking it, earning some interest right away, which is amazing.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Alex FAZEL, the cryptocurrency advocate, TEDx speaker, broadcaster, and blockchain educator. You are the Chief Partnership Officer at Swissborg, a team of finance and technology experts dedicated to democratizing crypto wealth management by making it fun, fair, and community-centric. You're also the host of Kryptonites, a popular YouTube channel dedicated to blockchain and cryptocurrency education that's also featuring me soon as a guest. Swissborg is ranked in the top 5 largest DeFi liquidity providers with over 500,000 active community users. Your goal is to open up decentralized investment opportunities to the masses. Today is a big episode because we're going to take a deep dive into the Polkadot Parachain auction and show how anyone can profit from this incredible opportunity known as decentralized crowd loans. Alex, welcome back to London Real.
Making me blush, Brian. Thank you so much for having me back.
Great to have you here. A lot of people will remember Alex in the other chair for our 10-year anniversary. Alex spent 3.5 hours going through my whole life, and it was an amazing episode. So thank you so much for that. It was a lot of fun. And this time I thought I would turn the tables because we got something super exciting to talk about right now. Maybe it's something our grandchildren will look back on, because this is kind of a once in a lifetime, once in a blockchain opportunity. And it's these Polkadot Parachain auctions. All of my students in the DeFi Academy are excited to learn about this. And you're the guy, because you understand this stuff really well. And so I want to jump into it just so everyone knows we got slides coming. We got a lot of knowledge. We also got specific protocols that we're going to talk about that are going to be on this auction that Alex has already done a deep dive into, done some due diligence on. So this is going to be action-packed with actionable information, and I'm pumped. So thanks, man.
I'm so pumped. This is probably the most important topic of Q3, Q4 2021, perhaps even 2022.
Wow. All right, so this is a really big deal. It feels like a big deal. Let's start off by asking the big picture question, which is, what is Polkadot? Some people have heard of Polkadot. We know that the founder, Gavin Woods, was one of the co-founders of Ethereum. We know is a professor, I think, Gavin Woods. He's got a PhD. We know he's got a great vision. And we've been hearing behind the scenes that Polkadot is one of those chains that could change the game. I would say in a strange way, there's parallels with Cardano because they were both former co-founders of Ethereum. They both have their visions, but they're very different technology protocols. And in a way, this is almost the coming out party. We get to see what all the fuss is about and what's going to happen. And right now, if you look at the top 10 cryptocurrencies by market cap, again, you see the ones that you would expect to see. Bitcoin at the top, Ethereum, you see Cardano, Solana vying for the top status here. And then you see DOT always in the top 10. And it's offering a real solution to the big elephant in the room in DeFi right now, right? And let's be honest, most of the DeFi protocols are based on Ethereum, and it's a victim of its own success, right? It's just too good, too fast. And right now, all of my students in the DeFi Academy, they're complaining about high gas fees. They're complaining that it's too slow. And if we wait around for ETH 2.0 to happen, we could be getting more gray hair, because I've had people like Stani Kulichev in this chair who runs Aave, 29 billion locked in that protocol. And he said sometime in the next 10 years for ETH 2.0. So we can't hold our breath for that software upgrade. We need to start looking at other options. And from what I hear, DOT represents a viable alternative. Have I got that much right? And is that the way you look at Polkadot as a protocol?
That's exactly it, Brian, because, like really 2021, we hear about NFTs, we hear about metaverse through Facebook, but really one of the most important topics is the battle of the blockchains. Proof of stake, proof of work, transitioning, and having new models like you're saying. And as you said to me the other day, Brian, which was so well said, is when you were looking at the Pantera report and you looked at Microsoft in its early days, its dominance in the market, and after that was a great example.
Yeah, it's a good point. And we've had Dan Moorhead, who's the founder and who runs Pantera Capital. They got $3 billion under assets just in the crypto space. They had the first Bitcoin fund back in 2013, which has had like a 67,000% return. And again, he likes to use this analogy of like Microsoft back in 1998. It dominated the whole market cap of the technology world. Back then, I think Amazon and Apple were like 2 or 3 billion. Microsoft was 200 billion. And Facebook and Google were zero because they didn't exist, right? This was the back then. Fast forward to 20 years forward, Microsoft has grown by 10x, right? It's still done very well for itself. But what's really happened in the tech space is you've seen the FANGs, the Facebook, the Amazon, Apple and Google just come in and grab huge chunks of that market. And that's what I think he thinks we're going to see in this space. And I think that's the analogy you're making. Maybe, Ethereum is going to be the Microsoft. Maybe it will see a 10x return. But the truth is, you're going to see trillions of dollars of value created by these new protocols. And that's what Google, Facebook, Amazon, and Apple did. They created trillions to the whole ecosystem. Everybody won, but some won more than others, right? As far as a scale. And I think we're seeing Polkadot as one of those that could take a huge chunk of the blockchain market share, from Ethereum, right? Because right now it dominates DeFi at this point.
And I think that's a great analogy because, Brian, again, I'm going to vulgarize this a little bit. It may not be as accurate, but it will definitely be more easy for all those out there to understand. But Ethereum, I picture it like a highway, right? So you have a highway, you have your cars, which are the transactions, right? And when that highway gets congested, because they're all in the same blockchain, gas fees go up and it gets slower, right? While Polkadot, it's, for lack of a better analogy, is kind of like creating your own private roads. So rather than just throwing everyone on one blockchain, one highway with a few gas stations along the way, you're really trying to create your own private roads to reach your own destination. So I think that's an analogy that could help. Obviously, it's also like a highway, but you have your own private roads, which helps with efficiency, which helps with gas fees, and then there are other problems that they're solving, but perhaps that's one good way to look at it.
Yeah, and that's the beautiful thing about decentralized finance. Back when I was a banker, you couldn't necessarily create a new road. You have to do business with the top 10 banks. But in this case, anybody can put a new piece of technology out there, and if it's better, then people will go and use it. And right now, like what you said, Ethereum's been an incredible piece of technology. It's done massive wonders for the entire decentralized finance space. But right now, it's getting congested. And all of my students, they complain so much that they can't do simple transactions without paying hundreds of dollars in gas fees. And they all say, Brian, what else can I do? And I say, well, you've got other blockchains that are up and coming. So we're waiting to see what Cardano rolls out. We've had AVAX. I had the founder in here talking about how he's got a new consensus protocol. and it's fast, and they're really showing, real value there. You've got other things like Polygon with the second layer solutions. And now you've got Polkadot that's finally rolling things out. We've been hearing about this company that's creating things called parachains. It's talking about cross-chain protocols where potentially we can use all of these chains, whereas right now it's very hard. I went through my students last night in my DeFi Academy, and they had to set up an AVAX wallet and a Polygon wallet, and to try to move your assets from the Ethereum wallet, it's a real struggle.
It's a struggle.
And it's expensive. And I think one of the things Dot wants to do is to make that even automated in the future. And so the truth is, we welcome any kind of new pieces of technology. That's the beautiful thing about this space. And again, we've been hearing about Dot for a long time. Now it's happening with these auctions, right? And now is this really incredible time where I think they have like 100 slots inside Polkadot that they're kind of allocating to certain projects. And I think this is the time where they're starting to determine what companies can kind of come in and do business with them. In a weird way, Polkadot's kind of different than Ethereum in that sense, whereas it's kind of allowing a finite number of protocols to come in and initially build on those. And that's what's coming up with this auction. Do I have that about right?
That's exactly it. And I think like you hit the nail on the head when you mentioned that parachains are kind of like creating your own private blockchain, because Polkadot is a layer 0, which in simple terms is like the infrastructure of a building. So below the first floor, you have all the infrastructure that holds the building. That's the Polkadot layer, right? The relay chain. And then these guys have layer 1 and they can customize their own chain. They're like, okay, I don't care about decentralization so much. I want speed and efficiency, or vice versa. They really create their own rules. And I think that's the genius moment of what parachains are and how people can create their own rules. They don't have to abide by this whole highway that we're talking about earlier, right? So that's one innovation. And then you said the actual Crowdloans is something that is incredible, and we'll jump into that later, I assume, yeah?
Yeah, we're going to get to that really quickly. And again, we're going to be talking about specific protocols, specific companies that have specific solutions out there. Yeah. And this auction process is pretty fascinating what's going on here. So let's jump in and talk about what's happening. Again, it's interesting to think about this layer 0, these layer 1, these layer 2 solutions. And again, Polkadot is fighting for market share against those top 10 market caps. So again, we see Ethereum as a platform. We see Cardano. We see AVAX coming up. We see Solana trying to come in and vie with their own protocols. Everyone's kind of fighting for these layer 1s, and everyone's trying to look at the problem differently. And it seems like Polkadot has a really interesting way of, like you said, that layer 0 solution and trying to set up these layer 1s that other people can use. And again, some of the tech is still quite complicated, and the cross-chain and the parachains, but now we get to find out. This is where the rubber hits the road, right? This is where we can see what these protocols can do. And now with these auctions, it's almost a revolutionary way of regular investors buying into these protocols. And that's where I think this gets interesting. And before we jump into kind of maybe the definition of an ICO and an IEO and what's happening with these Crowdloans, maybe we should talk about what just came before this, which is Kusama.
Yeah.
Because Kusama is another project kind of from the same organization that seems like it's kind of the scout that goes out ahead. It's almost like it's a development project that's almost testing the waters. And Kusama did their own auction recently as well, with success. Maybe you can just talk a little bit about that, and then we can jump in.
Yeah, just like you said, Brian. So Kusama is the test net, right? So Gavin, when he built Ethereum and started helping with smart contracts and et cetera with the code, then he realized, okay, our biggest challenge, as you're mentioning, is scalability with Ethereum, right? And so he was thinking, okay, I want to build something that's scalable, but also secure. And like you said, that can bridge across EVM compatible smart contracts, bridge the whole infrastructure, the whole world. So finally, we can use something that everyone can participate in. But one thing that he did really well on top of that is create Kusama as a test net originally. But actually, Kusama has evolved in a way. It has this really cool branding. It's like the crazy cousin, expect chaos. And on top of being a testnet, now some people actually, they're thinking, listen, I want to build on both infrastructures. I like Kusama. I want to test. Some people may stay on Kusama. But I think one of the best analogies now, rather than seeing it as a testnet, because it's very legitimate, the code is, and the teams, they help each other. So Polkadot guys help. It's one family in there, Kusama and Polkadot. But now I kind of see it as, almost like an NCAA level, an NBA level, or NFL level, or maybe like ONE FC versus UFC, where some people will be happy to stay at Kusama level, but some people may think, okay, for my reputation, I want to build up and grow on Polkadot. Do you know what I mean? I don't know if there's a better analogy or if it's...
Oh, I think that's a good analogy. It's like the minor leagues to the major leagues. Maybe.
Yeah.
So people are testing things out, but if you want to go to the show, as they say, like when you go to baseball in America, or you want to go to the UFC, that's where maybe all the eyeballs are. That's where the scale is. But you can still go to these scrappy protocols that are still doing some big things, and Kusama is kind of that protocol. I think it's actually genius.
Yeah.
Because when you look at Cardano, again, I've had this discussion, and I don't think anyone would disagree. You've got the spectrum. You've got Charles Hoskinson, which is kind of the I'm going to white paper everything and go theory. And then Vitalik, which was let's build it and see if it breaks. And those always were the two extremes of these two individuals. And then you have people in between. I had AVIX founder, Emin Güneşir, who said, I'm somewhere in between. I'm a Cornell professor, but I realize I better build something and it's going to scale and be fast. So that's what he's doing. And it sounds like Gavin's thinking around a really interesting solution. Kusama can go test the waters and go ahead and break some stuff, but it doesn't have to ruin the whole reputation of this long-term thinking protocol, which is Polkadot. Sounds pretty smart, actually. Sounds like maybe we wish a few other protocols would have done that too, because people sometimes struggle from the slowness of, say, the Cardano happening, or even the ETH 2.0. And maybe that is a really genius move that with our learning from that protocol. So yeah, we've seen Kusama do this. We got some charts later to show how their auction process went, but that's a good guide of what could happen with DOT going forward, right?
Exactly.
Okay, good. All right, we're going to jump in and get into detail here. I just want to tell people, we're going to show you how you can take DOT, and if you don't know how to get DOT, you can go to Swissborg and get DOT. Once you have the DOT, we're going to show you how you can use that and basically invest in these protocols in a brand new way where you don't have to try to get in on an ICO or a pre-ICO or some of these other riskier investments. And this is all what a crowd loan is. And that's why I asked Alex to come in, because he's got incredible ideas around this. And he actually put together a really good slide presentation that we're going to use here. And we'll also put it as a downloadable PDF on the website version as well. We'll put a link below so people can grab it afterwards. So again, if you're watching this now, if you're listening to us later, just come and we'll put all these slides up. There's some really amazing intel. You've gone deep on this. You've obviously done this before. So should we jump into this?
Let's do it, man.
All right.
Yeah.
Okay. So cool. You want to key out that first slide and then just talk us through, well, what's going on here? What is happening?
It's crazy. Like what happened in the past 5 to 6 years, the evolution, Brian, is just beyond anyone's comprehension. And I really like to bring some context here and go all the way back to 1602, where we had the very first IPO. Because, really, is decentralization the key? I don't think so. I think it's financial inclusion before all. We need maybe decentralization for trust because we've broken those trust barriers so many times in the past. But really, when the first IPO in private equity surfaced, that's when the world started becoming extremely exclusive. As in, private equity sounds like wealthy friends or wealthy bankers getting in on deals before an IPO where us, the average Joes, get access to the deal after. And really, the analogy that I have here is of these people have access to this supermarket where these guys, very privileged people, very already wealthy people, just go in and they take all the best brands, the best food, and just throw it all in their house. And then we just go and get the leftovers.
Yeah, the rich get richer. Right?
The rich get richer.
Right, and that's the way the system's always kind of built, right? And you're going back to the 1600s where this phenomenon kind of started, right? Where there was private equity and people got that offering. I was with my students the other night and I said, raise your hand if you got to participate or were offered to participate in the Series A round of Facebook back in 2007 when Peter Thiel invested. And of course, nobody raised their hand. And I said, did you get the phone call? And nobody raised their hand. Of course you didn't, because a small club of people in Silicon Valley got access to that round. And only later, post-IPO, could you actually scramble in after everybody had been invested. It went up 1,000x. Only then could you get access, right?
Exactly.
And that's not the way it should be.
It's not the way it should be. And it's even crazier than that because obviously the investment banks, all their friends, they get into these crazy deals. But it's even like, it's all across the board, Brian. Like I was doing my studies in 2004 in California. I went to this really nice house in Beverly Hills. There's some sort of party. And I was chatting with this guy and he was getting access to investing in one of the first Avengers movies. And why did he get access to this investment deal? Is because he had a really good friend and because he was extremely wealthy. And the minimum ticket size was $2 million. So to join that, and some of these movies, they do like 10, 20, 30 X's, right? There's a lot of money to make in the movie field as well, and Hollywood we know very well. So you know what I mean? It's not just the pre-IPOs, it's private equity in general, or even early investment deals were all very exclusive.
Right. Okay, so this is a chance to stop that from happening and to democratize it, to make it more transparent. How would you describe this process as opposed to the traditional private equity?
Yeah, I would love to jump into the next slide.
Yeah, cool. Let's do that.
Yeah.
All right. So let's put the slide up. Just describe what it is. Go ahead.
What it is. So I think we're understanding here that we're making an exclusive world inclusive, and that kicked off with the ICOs, right? So one beautiful thing about the ICOs is the simple fact that, for example, with Swissborg, we had 24,000 people to participate, not 10 guys in a room, wealthy guys who just get wealthier and wealthier and just keep on making that wealth gap disparity just enlarge it, right?
Right. This is when you guys ICO'd in 2017?
Yeah.
Okay, right. So you had 24,000 people that were in on that, and it was something that the public kind of knew about, and people that were interested and that liked what you guys were doing could jump in and invest. Right?
And 148 countries participated.
Wow. Okay.
Brian, that market penetration is better than McDonald's.
Okay, gotcha. And that was an ICO, an initial coin
ICO.
offering that you guys did back in 2017, and that launched kind of Swissborg to the world and your community. And so that was a great example of democratizing finance. Right.
Borderless finance, anyone could participate, not even just the US, not just a closed room, but anyone on the planet more or less could participate, except some sanctioned countries, unfortunately. But I really think that opened up a lot of things. On the flip side, there are lots of scams, right? Whenever there's opportunity, lots of scams kick in. And that was kind of the downfall, which kind of created this negative connotation, unfortunately.
Yeah, the ICO boom and bust is something we cover in week 1 in the Academy. And we talk about how there was amazing capital raise, but also a lot of white papers that went nowhere, and then some people that just disappeared with the money because there wasn't the due diligence that would happen in, say, a securities public offering like in the States or on an exchange. So that was the downside. Also, there wasn't much information back then. You know, you couldn't necessarily do due dil on directors. There wasn't VC. I mean, these days you can actually do a lot more due dil, which I think you're going to get to on some of these. But why don't these companies that we're going to talk about today do ICOs? That's my question.
That's a really good question. Well, I think one of the sides is, of course, there's that negative connotation and stuff like that. But nowadays, like what is revolutionary with Polkadot in this particular crowd loan part is obviously they still get funding, right? They still get funding from different groups, which we'll look at and stuff like that. But the difference here and the genius mechanism behind this is that Web3 and also Parity Technologies will support these projects. Say, okay, we're going to give you the devs, we're going to do hackathons, blah, blah, blah. But still, at the end of the day, even if we trust you, you have to verify yourself. Just like the blockchain says, don't trust, verify. So you're going to have to get a community to back you. Even though we know you guys have been supporting you, everyone has to tick the box for you to be legitimate enough to use one of our parachains. So you see the genius behind this, right?
It's fascinating because I worked in finance for 15 years, and you know, you never saw these type of hybrid deals. Like you said, when you wanted to raise money, you did through private equity offering, or you did an IPO, which went allocated to the investment bankers, and then the public got a chance to buy. With ICOs, like you said, you had to kind of take a chance, get in on that coin. But with these crowd loan auctions, it seems really interesting because you've got the people involved in DOT that are kind of, you know, allowing those protocols to be in this auction, but they don't win unless enough people stake DOT on them. So you've also got the community voting as well. And we're gonna show later, if you don't get enough of that, your project doesn't go forward, right?
Exactly.
And that's pretty interesting.
That's pretty interesting. And one thing that's really important here, Brian, that we need to stress, I think, is with ICOs, you're investing money. Here, you're just lending the money. You're giving a loan. And with Kusama, so in 48 weeks later, you get back all your tokens. With Polkadot, 2 years later, you get back all your tokens, plus you gain the other companies that you're rooting for's tokens.
Right. I think we have a slide here that maybe we'll put up now that says, what are crowd loans? I think we were part of that slide. I guess we'd already, this is the one that has the diagram, and you see crowdfunding versus crowd loan. And again, you can see what Alex was talking about there. In the ICO, you can see that the community would send ETH to the developers, and developers would send back the tokens. I'm guessing you guys did something similar. And then we see how the project vies out. But with the crowd loan, you can see it's actually something fascinating going on there. The investors give the DOT out to Polkadot, which then gives you the DOT back after 2 years, and then they go ahead and give the Parachain slot to the developer, and if the developer is successful, then they send you project tokens 2 years later as well. Is that right?
And the beauty of that is the tokens are not owned by the project. It's locked on the blockchain, so they're still yours. It's just a timestamp, so they can't run away with your funds.
Okay.
So no more scams.
Fascinating. All right. So this is what happens when finance gets smarter. People realize that you can't put a square peg in a round hole. Like we're using basically instruments from the 1600s to try to finance investments from the 21st century. It's ridiculous. So why bother with any kind of O's? This is something that hopefully solves everyone's issues. Now, the first red flag I got to pull out here is 2 years. Like, there's a lot of people watching this now, they're going to say 2 years. Like, I don't want to hold my money up. The beautiful thing about an ICO is I can see that my X coin went up the next day, blah, 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 because there's a lot of downside with that as well. Why a 2-year period? Why should people feel comfortable with that? How do you get around that? And again, Kusama did 48 months, so that was less than a year. Polkadot's obviously choosing to do a 2-year period. Why? Why 2?
That's a really good question, and maybe that can lead us to the risk and rewards. On the next slide, should we go to the next slide?
Yeah, let's do that. All right, so the next slide is saying, what are the risks and rewards with crowd loans? Go ahead.
That's perfect, Brian. So I think that's a perfect segue. So obviously we have here, what are the rewards of a crowd loan versus an ICO, right? And the main one is, Brian, you're getting both tokens. You're getting double the amount of tokens for one loan. You're not investing, you're just loaning it. So that is absolutely amazing. And the other part is the project's not touching your tokens, so there's no rug pull, there's no scam. Your tokens will always stay on chain, right? And it's just a beautiful way of just really innovating the way we invest. It's not even investing. It's a loan, it's a savings account potentially, right? But what are the downsides? What are the risks? You mentioned one actually right there is, what if the project doesn't do well? And let's say Polkadot goes down or Kusama goes down, it loses trust, there's a hack, I don't know what type of freak black swan event, then you'll end up only having one token with value. That project can always migrate to another blockchain. But one good thing, for instance, is like if you choose the right project, so Moonriver, for example, on the Kusama auctions, like you would actually have more value already in your money now, even if Kusama went to 0, because the token has been doing so well and everyone's so supportive of it.
Okay, so you can track the token, you can see how well it's doing, you just don't get it until 2 years later.
Exactly.
Interesting.
Exactly.
Okay.
So that would be the worst case scenario. And the second one is impermanent loss. So for people who don't know there, when you're staking something, and maybe when you get it back after the 48 weeks or the 2 years, then maybe it lost a little bit of value relative to the day you actually staked. That's called impermanent loss. But then once again, you're having 2 tokens. So wouldn't the impermanent loss be compensated if you choose an awesome project? Probably yes.
And that's the impermanent loss of your DOT, really.
Exactly.
Okay. And this is an interesting point. And again, I'm guessing the 2 years is to allow the project some breathing room to go ahead and actually build what they say they're going to build, so they don't have to worry about token crashing or weird market sentiment. Is that the reason, or are there other reasons for that kind of a long period of 2 years?
It's a really good question. I'd love to ask Gavin, like, what is the rationale behind that?
But
one thing that's good, I think it gets us to think more long term.
Yeah.
In crypto, everyone's looking for a quick buck, get rich quick.
Yeah.
But real investors who believe in something, they should be able to hold 2 years.
I agree, and I think this is a really good challenge to anybody watching us right now to test your own psychology. Because the 2-year period, it's one of the first things I saw. Wow, 2 years, that's a long time.
It's a long time.
But it's not. I mean, we're in this space for the next 10 years. And I've told my students, if you're trying to buy a house by January, you're going to make poor investment decisions.
Yeah.
Anybody trying to make money quickly, I don't care what market you're in, even the greatest bull market, you're going to make bad decisions. And you're probably going to end up giving most of the money away. So force yourself to think long term. Again, you're investing in a protocol with a lot of good things going for it. DOT is right up there when it comes to great founders, great community, really great infrastructure. And again, you're basically investing in DOT. I mean, that is the downside, and the upside is this token. Let me just make a comparison and tell me if I'm off here, Alex. With an ERC20 token, right now, anybody can issue an ERC20 token. Vitalik Buterin doesn't go and do DIL in there. You don't get Ethereum as collateral and guess it goes wrong. We've seen recently the Squid Game token can go to 0.
Oh my God.
So again, that's the flip side, is you go into an ICO with upside, but just because it's based on Ethereum doesn't mean anything. In this case, you actually have this fascinating layer of protection. First of all, you've got to have consensus from a bunch of other people for it to get the go-ahead for the auction. And then, Worst case, you just get the dot that you're basically staked for those 2 years. And so it's a completely different way of financing. In the city, we have equity finance and debt finance. They're kind of two different things. This is like a hybrid. You have the upside, but you also kind of have a fixed payment that's coming back to you. So
exactly, Brian. I think you're stressing the most important points, which is this is probably the safest way to earn a return. There are two ways. There's proof of stake, as we know. Proof of stake, you just delegate, or you actually give your tokens to a validator. Either you validate, or you delegate, right? And you just earn. And by the way, that's one thing that they need to compare when they're going on Crowdloans, because right now, if you go on proof of stake with your DOT or Kusama, you can earn maybe 14-15% for Kusama, and you can earn between 8 to 13% on your DOT, right? So one trade-off is if you stake your DOT or Kusama in a Crowdloan, you're also not going to be making that APY through proof of stake yields, right?
Yeah.
But that's
so you're giving up that yield. A lot like if you did like a loan to a startup that they had to pay you back in a year, you're not getting the interest rate on the money that you would get in the bank, but they're going to pay you back the loan in a year and potentially, options on the shares or whatever this is. So that's this instrument. So again, I appreciate you saying that the pluses and minuses. Again, it can't all be rewards. Otherwise, this would be a no-brainer. You are giving up, like you said, that staking reward or that carry you would normally get. You're locking it for 2 years. You could have impermanent loss on DOT. But at the same time, you get to track the token, you can see how it's doing, and you're potentially going to get back, you're going to get back your DOT and then this new token. And I guess that's what makes this really interesting.
Perfect summary.
Yeah. All right, let's get into the nitty gritty, because people come here because they actually want to participate. I think your next slide shows people how they can actually do this. So maybe you walk us through it, because the process is everything. So how do people do this?
Okay, great. So you have both desktop or mobile. That's the first way to start. And you also have non-custodial, so you own the assets, or custodial. So those are kind of the two kind of categories that you really need to look at. And what is always recommended is just to open up your Polkadot wallet, which is Polkadot JS extension. You have it on your Google Chrome, you have it on your Firefox, and you can just add that extension. That's the easiest way to go, and probably the best way. And the reason why I'm saying this, Brian, is number one, it's the safest way because you own the assets, it's on-chain. And number two, you get the maximum amount of rewards, because sometimes they give bonuses, you make it an NFT. There are different type of bonus systems across different Crowdloans.
Okay.
So that is the way to go, I would believe.
That's if you do it yourself, as opposed to allowing a centralized exchange to do this for you.
Exactly.
So I potentially could go to, you listed here, Binance, Kraken, and KuCoin, and they would allow me to participate in these auctions, but they would be the custodian. So ultimately, I have their counterparty risk, and I might not also see some of those benefits and airdrops and other things.
That's exactly it. So counterparty risk, and you don't get some of those bonuses.
Yeah, and again, there's layers of security. That DeFi is really all about security, and I tell my students all the time, you've got people that can hold your assets in custody. You've got exchanges that can hold your assets. You've got hot wallets, you've got cold wallets, and then you can, tattoo the blockchain on your arm if you want, right? I think Vitalik literally writes down his chains for some of his big pieces and rips them in two and gives them to different pieces. Lots of layers of security. So, but even you said, even in the centralized exchanges, you might not get the same allocation you can get by doing it yourself. So for people that want to do this, get the Polkadot extension, make sure it's the right one, again, when you go to get these things, and get it on your Chrome extension. Also, there's some mobile app wallets that do the same thing.
Yeah,
right?
I think actually, Brian, so the Fearless mobile app is kind of non-custodial, but it's actually easier in terms of the UX. That's the reason why I threw it in the middle. And some people just like mobile because it's easier to check than have to turn on your computer, connect to the internet, etc.
Yeah, I've seen you on the Fearless app. I think you use it, right? So I know you actually use it. So, right, all right. So that's how people can get started. I agree. Sometimes the mobile's a better experience. I have Chrome extensions for my MetaMasks and my AVAX wallets and all that stuff, but sometimes they're a little bumpy. Yeah. Sometimes you go home and then your iMac at home or it doesn't have it, and all of a sudden, where's my wallet? And again, it's not as seamless as your mobile. But again, remember, security is always your job on any of these assets, so make sure you do that. Okay, good.
All right, awesome.
You want to bounce to this next slide?
Yeah, obviously. So very quickly, let's just say that we're taking, for example, the Polkadot JS extension, just because that's the best way. It's the actual Polkadot wallet, and you own your keys, everything, and all those good advantages. So you just download you can see here on the slide, right? You see Polkadot JS extension. You can either put it on Firefox or Chrome. You see the buttons, orange buttons at the bottom. The second part, a little bit complicated, but not so bad. When you're creating your wallet, you're going to have two wallets. And the reason why, as you know this very well, Brian, is one is for gas, fees, and one is for the actual crowd loans.
Right.
So 2 wallets, you'll separate those, and then all you need to do is send your DOT and KSM.
Wow.
And as easy as that. And then after that, the third step is you're going to locate which crowd loans. We'll talk about the due diligence and what are some tips on how to choose the right projects. But you go to their website, you connect that Polkadot.js extension wallet, and then you can participate in crowd loans.
Okay, good. And so let me just zoom out really quick. A lot of people might have done this with Ethereum, and maybe people haven't as well, but let me just walk you through it. A lot of people have a MetaMask wallet. They'll have ETH on the wallet. And sometimes they don't realize it, but they pay for transactions also with that ETH, which is gas fees. So one crypto asset has 2 jobs, right? It's an asset itself, and it also gets used to pay for these gas fees. And you need the same with any other chain, including AVAX, Polygon, and of course with DOT as well. So this is just standard operating procedure. You have to have a separate wallet specific to the crypto asset. This is, get used to it. Although maybe if it's in DOT's future, maybe we won't be doing all these things if there's real cross-chain connectivity. But right now we do. So get the extension, get your wallet, get enough of DOT to where you have for gas fees and to stake as well. And look, let me just say to everybody, I know some of this stuff seems like difficult technology piece. And again, this is probably why most people come to our academy, because this stops them. And so then they just don't do it, right? Programming the VCR. It's like grandpa used to ask you to program the VCR because it's too complicated. But this stuff isn't that complicated, and this is a way to take control of your finances, period. And if you complain about private equity giving all the deals to the people in the know, this is your way to fight back. You can do a Google extension right now, push yourself through a little technology resistance, and find out how easy it is. And again, you don't have to go big here. You can stake a few DOT. You can start small and just get used to these protocols. And I just say for everybody watching, whatever you do today, try getting a DOT wallet. Right? Try getting the extension, get some DOT, and maybe try doing this. It's an incredible experience. You'll learn more about finance in an hour than you will getting in an MBA from MIT. And I've been there. And theory doesn't work, action works.
Action works. And just to piggyback on our previous analogy, which was a highway, remember, with the gas fees and different lanes and stuff and routes. So the reason why you have 2 addresses and wallets is simple. One's the car, one's the gas. Simple as that.
Okay.
So your wallet is a car, and then you have your gas for the car to work.
Good. Okay, that's a good analogy. Okay, super helpful. Right. Again, if people have questions, please leave them in the comments below. We'll either grab them at the end of this show, and I'll try to answer them, or we'll go back and answer them later. This is great stuff, but now we're going to get into the juicy stuff, all right? Because there's lots of options out there. All these companies have funny names, funny logos, and business concepts that are hard enough to understand even if you've been in the DeFi space, let alone people that don't. So I'm asking you, how do we evaluate these companies?
The $1 million question.
Yeah, exactly.
And we could go really deep, but we'll keep it simple for those who don't have maybe the technical background to understand code and everything like that. But we will go for something called the 3 T's, which stands for team, traction, and technology.
Okay, team, traction, and technology. All right, and that's the way we're going to evaluate these protocols.
Exactly.
Okay, fantastic. Let's jump in. Let's jump into team.
All right.
You got a great slide here. Talk to me about team. How do you look at this?
So team, one thing that's important for us, like Brian, is everyone that's involved, all the backers. It could be the people who funded the project. It could be their employees. It could be their devs, their advisors, their community. We're all one team, right? We're all in this together. So that's kind of the definition of team. It's a lot broader than just employees, for instance.
Right. That's really important because back in the day in tech startup, you would never look at the community because you couldn't talk to the community. I couldn't, but you could talk to the founders and the investors. But now you can talk to everyone involved. So you don't leave any stone unturned. You go look at everybody and see what they're doing. Okay. And so in this slide, you show some examples of you doing a due dil on team, right?
Yeah.
So if we pull the slide up back again, tell me some of the things I'm seeing on this slide that you're looking at here. Like what are some of those things?
Really good question, Brian. And of course, LinkedIn is an incredible resource. You can look at every employee. Do they actually have employees? What is their background? What is their education? Do they fit for that role? Because it's not just coming from out of Stanford or MIT. Is their actual position make them qualified to succeed in that specific role? So LinkedIn is a great source, super basic. And then, of course, we can move to the backers, right? So you see here, Pantera has backed some projects, Parify Capital, Polychain Capital, Digital Finance Group. I mean, the backing is so important because these guys do intense due diligence.
Yeah.
They do it for us, right?
Yeah, exactly. I mean, Pantera, I've had Dan Moorhead on here, and those men and women have been investing in blockchain protocols for years. They literally go around the world. They trade these coins on a daily basis. Like, if you're going on the back of them, they help you with due dil, right? It doesn't mean that you can't own your own risk, but it's a good sign, right? When you see a company, a really strong VC putting chunks of money in a protocol, right?
Exactly.
Okay.
And one key point here, which I learned from Dan Reeser when he came on my show, is you can see here in this black square, there's a Web3 Foundation grants program. Okay. So Web3 and Parity Technologies, when they actually give a grant, that means they're endorsing that team. They like the idea conceptually. They want them to build a bit further. And some of these projects have received 2, 3, 4, 5 grants. So if the entire foundation behind is giving so many grants, it's kind of like, okay, here, go, keep going. I like this. I like where you're going. So the grants and the hackathons winners, who won a hackathon, is a very nice kind of tip.
Yeah, the hackathon's a nice touch. And you can go and research and find that stuff out. And this Web3 Foundation is all part of the whole Polkadot umbrella of various companies that kind of push this protocol forward. And again, this is really interesting information that most people don't know. And some of it's quite simple to do, right? You just have to know what you're doing. And again, you know, LinkedIn, like you said, the VC backers, the foundation program, who won the hackathons. Like, you can dig into this stuff and find out what's going on. You know, when I had Stanley Kulichev in here a couple of months ago, and they just announced the big partnership with AVAX, I said, how did you know to back them? You know, they only have a few protocol chains on their front page. And he said, Brian, all the forums told us that. All the coders were using their code. Like, we all knew, because they're in that development world. So, you know, the information's there, right? You just have to go look for it and do your due dil, right? Okay. All right. So, and you looked at Akala here. Is this one of the companies we're going to talk about potentially? Is that
yeah, absolutely. And the last thing here, Brian, is just like
Yeah.
Gavin Wood, you can see his picture. If he's following the project, that's usually a good sign. If the master is there looking at.
So if Gavin's following them on Twitter, that's another good sign?
It's a little sign, which is kind of a good segue for the next part, which is traction, right? What is our traction on social media?
This is really important stuff. Again, I had a buddy of mine in New York who said, Brian, DeFi is like hedge funds in the 1990s. He said, you can see an opportunity and you can go grab it. Whereas now, hedge funds in New York, they compete with, you know, people all around the world. They compete with high frequency trading. It's not as easy as it used to be. Whereas back then, you'd see an opportunity, nobody was taking advantage of it, the capital wasn't there, and you could literally go in and grab it and get incredible returns and back amazing projects. I feel like the same thing's happening in DeFi space. It's almost slow motion in front of us. And sometimes my banker mind says, this is too good to be true. Like, if it was so obvious to just look at these things, how come everybody wouldn't get it? But as I tell my students every single day, 1% to 2% of the world is invested in crypto. That's it. Nobody knows what an NFT is. Very few people know what you know. If you're watching this broadcast, you're probably, you know, obviously one of the top 1% of people being aware. So there are opportunities out there, and don't second guess yourself on these things, right?
Absolutely.
Yeah. Okay.
Should we transition
to
the
next
next
second
one?
T. Yeah, go ahead.
Second T is traction. As you guys can see, the rocket to the moon.
Nice.
But technically, social media is one of the easiest ways to look for traction. You know, Discord, Telegram. There are some red flags, though. Like, there are some companies that they just use bots. So you have to really be careful to filter the bots or the fake communities and stuff like that. That's one key point. But as you can see here, like, Brian, Twitter is the ultimate source for crypto, as you know. Like, a lot of the crypto family, they're on Twitter. And this can be both quantitative and qualitative.
Okay.
So here you can see 165,000 followers for Akala specifically, which is a crazy amount of people. That's more than some blockchains. And they haven't really launched their core product yet, which is crazy. Is it real or is it not? There's some people cheating, some people not. But the most important qualitative part is who are following them.
Yeah, let's zoom in on some of these tweets. Like, you've circled some of them. You got Tanu Chitra, who was at the token conference with us, right?
Yeah.
Who's quite a leader when it comes to some of these DeFi technology blockchains. So you see him following and retweeting. You see Gavin in there. What else do you see here that you've circled?
I see like influencers. So Lark Davis, which is one of the biggest YouTubers, and influencers are a critical part of the equation. So when you're thinking, and by the way, guys, this is kind of in between team and traction, but it's all linked together anyways. But having influencers that talk about a project on YouTube, their influence and their ability to convert their communities.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.